Hi, welcome to yet another series of Get More from Mallapuram, wherein the only purpose of doing this webinar series is only to have a proper education to all the people who have already purchased the policies or who are planning to purchase any of the insurance policies in Indian market. Okay, so this is what we are trying to do this, and even before we get into today's topic, let us actually look into the reason why we are doing it. That is all about providing the clarity for confidence. Okay, so the reason for doing all this webinar series is to provide the clarity for confidence. And before we get into the proper presentation, let us also do a proper declaration before we proceed further. Okay, the first one is we hereby declare that we do not represent any one insurance company. We don't represent any one insurance company. Okay, so we want to be very clear and upfront with you such that we can provide you the real neutral advice wherein you can take it as a third party advice for yourself. Okay, and at the same time we'll be discussing issues related to only insurance. No movies, no politics, nothing will be discussed in this webinar series. And at the same time, we are not intended to criticize any one particular person or a product of any insurance company. But if at all, if it just happens, it is only by chance, but we really don't intend to do that. And the opinions and the thoughts and whatever the discussions that we have in this webinar series is completely purely personal and cannot be taken as an evidence of proof under any court of law. So with these declarations in place, let us move into today's topic. And today's topic is how much of life insurance is required. Okay, right? So today's main topic is all about how much of life insurance is required for any of the persons like who's planning to take a life insurance or who has already got a life insurance but want to review his existing coverage in place. Are you with me? Okay, and getting into the presentation over here, so we will be actually looking into the agenda over here. So we'll be doing a little bit of small amount of situation analysis over here, right? And then after that, the real main topic, that's the clarity for confidence. So this is the section under which we discuss at length about the points of how much of life insurance a person should have, right? And at the same time we'll review the entire points and we'll come to a conclusion at the end, and after that we'll go ahead with the action points. So this is how the entire webinar session is going to be, and I hope everybody is excited over here. So shall we actually get into the situation analysis? If yes, please type in as yes in your chat box. Oh yes. Oh yes, oh yes. We thank a lot. We thank a lot for all you guys who have been consistently coming back to us, and giving us a lot of support in this webinar series. Thanks a lot. Thanks a lot, each and every person who is there on this webinar series. And yeah. So coming to the situation analysis, if you look into the current analysis over here, 75% of population, 75% of population are uninsured. That doesn't have life insurance in place. Okay. This is the fact, and this is the hardest fact. I'll also show you some numbers which is being given by IRD in their the regulator, the Insurance Development and Development Authority of India, who is the regulator for the entire insurance industry, right? In their annual report, we'll share even those details with you, right? But 75% of the population, the insurable population in India, are not insured. Okay, and almost 54% of the population are living in nuclear families. So gone the days wherein there used to be a lot of joint families coming together and living together, but now because of the kind of technology which has come in wherein people need to go to some other place for their earning and livelihood, right, people have now formed more into nuclear families. Nuclear families is husband, wife and children, that's it. Okay, so 54% of the population is like that, right? And the gross savings, if we actually look at, that means the entire population, if you look at the total amount of money which the people are saving for the future, and this is the main asset of our Indian culture, because most of us we always believe like whatever that we earn, we need to also save a certain portion for our future requirements. So this is how our culture has been, and it has been even proven in numbers that almost 30.1% of the total earnings, people always put it for savings. Okay, so this is a very good part of our nation, right? And savings and insurance cover only 7.8% of the required protection. What does that mean? What does that mean? Means if, say, suppose in case of any eventuality happening, right, and to meet all those requirements, if at all we need 100 rupees of expenses to take care of the family or their requirements or paying off the loans or any of these regular income requirements, all these requirements, if, say, suppose for example is required at the rate of 100 rupees, okay, then the existing savings and the insurance cover which our population has got can take care of only 7.8% of the requirement. That means out of 100 rupees, only 7.8 rupees has been taken care. That means almost 92.8%. That means you can actually see around 92% of the entire requirement of, in case of any eventuality happening, is not covered under the life insurance. Okay, so there's a huge gap, and that's the reason why most of the population, even if they have the insurance policy in place, they doesn't have a proper coverage. And why? And if you look into that, government encourages with tax benefits if people are paying the premium to save their taxes. So because of this, it is actually a good thing. Like the government wants to encourage people to save their taxes legally and also have a coverage in place, right? But if you look at, people have actually made up their mind to put their premium only to the extent of the tax requirement, the tax planning. That's it. Okay, I think it is around 1.5 lakh rupee under section 80C, right? Only to that extent people, like, you know, they look forward and keep the premium to safeguard their family. But if you look at the real life situations, which we'll be discussing it further in the webinar series, if you actually, the moment we go further, you will be shocked to see, that the amount of coverage that you have, probably 5 lakhs or 10 lakhs or 20 or 25 lakhs or 30 lakhs, is of no use in case of any eventuality happening. We'll see even all these requirements when we proceed further into the webinar series, right? And at the same time, this is the hardest fact, and the hardest fact is the current inflation is almost 7%. That means today's cost, the rupee, what the earning, the purchasing power of the money what we have currently is going to deplete at the rate of 7% going further, year on year, right? So today's money is always more powerful than tomorrow's money, unless it earns more money for itself. We'll also see how we can actually plan that particular savings portion also. Okay, so this is a situation analysis what we have, and to proceed further, you see the insurance penetration in India. This is actually according to the IRDA terms, into their annual report. It has actually increased a little bit sometime around 2009 2010, and but after that there's a continuous decrease which has actually happened, and this decrease has come down, and now it is almost close to around 3%. So 3% of the population has been penetrated by the life insurance segment. That means there's a huge gap, and there's a huge awareness need to be done. And we, as a part of Mallapuram Insurance and Allied Services, we are doing this Get More from Mallapuram only to help out people to educate themselves and to have a proper clarity, such that they'll have a confidence in purchasing their insurance policies. Whether they have already purchased, they can review the policies, or they were planning to purchase, This series is intended to help all those people. Okay. Now coming back to the presentation, right? So we have this situation analysis which is out there, and if we actually look into all these scenarios, then we need to have more amount of clarity now. The clarity for confidence. So that's the section now, and this is a section wherein we'll be discussing lot of our points of consideration for having how much of life insurance one can have in their lifetime. Okay, let's look into it. Then the discussion begins. Okay, so one question to everyone, like I request everyone to respond yourself with the chat box. Okay, chat box is the only source of communication in this webinar series, because we really don't know like now who is sitting where and what exactly they're doing. So this is via media how we communicate with each other. Okay, so when should we take, well, this is a question for everyone, when should we take life insurance? Yeah, can you just type it in the chat box? When should we take life insurance policy? I'm seeing many of you typing. Okay, somebody has typed in as, yeah, when you're young. Okay, good. Okay, right. And whenever you want it. Somebody has given me an obvious answer. Yeah, whenever you want it is what when we have to purchase, right? Okay, this is what most of us we think. This is what most of us we think. And you know the reality. The reality is we should take the life insurance policy when we are healthy. You can purchase anything in your life. Okay? You can purchase anything in your life with money. But insurance you can purchase only with your health. Of course, the money is also required in that. The premium is also required. But the primary thing is your health. Unless you are in good health, you can never ever purchase any insurance policy, and especially the life insurance policy. Okay, so let me just repeat it for the benefit of all the people who just joined the webinar series. So we were actually just discussing when should we take the life insurance policy, and the life insurance policy we should take when we are healthy. The healthier we are, the better we are, and the better the premium rates will be. Okay, and if there's an ill health, then insurance companies will not be able to offer the insurance policies. Got it? Okay, so let's get back to the discussion, right? Okay, so it is when we are healthy. Okay, anything more that you want to add it up? I think you can put it in the chat box. Okay. Someone is saying, yeah, when we are married. Okay, agreed. Yeah, definitely. Like when somebody get married, there's a lot of emotions which are attached now, because there are some dependent people in your family now on you, right? So yes, and yeah. Somebody says like, no, it's for the children's education. Somebody wants to have to go for an insurance policy. Good one. I think yes. It is not just saving for the children's education, it is on protecting their insurance, protecting their education planning, which you dreamt for your children, need to be taken care of. So that dream or that responsibility of children's education also need to be protected. We'll go a little deep in that during our presentation. Okay, right? Okay, so fine. I thank all of you who has actually given your responses in the chat box. And there is also one more thing. We should take life insurance when we are healthy and when we don't want it. Yes, this is shocking news, right? This is shocking news for most of you. Let me just repeat it. We should take life insurance policy when we are healthy and when we don't want it, when we just don't want it. Are you with us? Okay, somebody was actually putting a questions in the chat box like how? Well, we'll get into that discussion. Okay, see, if you look through the situations over here, whenever we want life insurance, let's look at when people look for having a life insurance. Probably certainly we have seen many of the situations wherein people have got their own health issues cropping up. They got to know their analysis, and they're able to crop up those health issues, and that's when they think like, no, now I think we need to go and have an health insurance policy. Okay, but that's the time when insurance company can also say we will not give you. Okay, so life insurance we have to take when we are healthy and when we don't want it. Got it? Are you with us? Okay, let us see. Let us go a little more into that. Okay, so when we don't want it, what are situations generally we see when we really don't want those kind of taking the life insurance policies? Okay, the first and foremost thing, when we just joined the job and we have started earning the money, right? Okay, we just finished our graduation or post graduation, we joined in a company, and then we got our first salary, right? And now actually you become insurable because now you are a earning member, right? But that's the time when we always feel, insurance, why do I require that? Instead, I'll spend a lot of money on my cloth or on my entertainment or buying some gadgets, right? So many things I'll be able to do. Now, no need to ask money from the family because now you are the earning member. You have all the right to do whatever you want to do. Okay, so this is the time when most of the people, when they are really good in insuring themselves, that's the situation they are in because they are absolutely healthy. Number one, they are young, because of which the premiums what they pay will be very less. We'll also see, we'll see within the presentation in a case how the premiums will change when the age differs. Okay, we'll also look into that. Okay, but currently if you look into this particular scenario, right? So people who are in this situation, they always enjoy spending money. Are you with me? Yes? Everybody yes? Please type yes in the chat box. Oh yes. Oh yeah. Yes. Everyone is saying yes. So everybody wants to spend money, right? And no responsibilities. So nobody is going to ask you anything. What have you done for this? What have you done for that? No, nothing. You just started earning money, right? And there are no responsibilities on shoulder. And absolute freedom. And because it is absolutely freedom, so we always tend to focus only on spending. So the main focus in this particular scenario is on spending money. Okay, now from that situation, what happens next in the life? People get married, right? And the emotions are very high because there's a new partner, life partner coming into the situation, right? In your family, right? And the responsibilities are started increasing, or it just started off, right? And not clear on how much to save. You just talk to any of the people who just got married, right? And earlier they used to spend a lot in their personal life, but the moment they got into the marriage, they will not be able to ascertain like how much they need to save. They really want to save something for the family, they really want to save something for the future, like that's intentions have actually just cropped up because there are some responsibilities which have come into the life. And because there are some responsibilities which have come into the life, people want to save. So this is where the focus will be. So the focus will be more on savings. This is how, like each of us, we went through the same life cycle, right? Or probably somebody is going through this life cycle. Am I right? If yes, please type yes in the chat box. Oh yes, yeah. We all went through the same situation, right? Okay. Now, the next stage comes where it's a young family where the children are there, right? Okay. So the emotions are still higher, right? Responsibility are still there. Now it is increased responsibility now. Okay. Now they're clear on how much to save, because I've seen people like now who start spending some money or saving some money for the child the moment they are born. On a monthly basis they put some 5,000, 10,000 rupees on a regular basis. No, they just want to put it for their and especially when we have seen a girl child, then they start putting it more money, and they really want to give a lot of comfort for the children. This is how the parents feel, and this is how we all do it. Okay, so now we are very clear. Okay, this is the amount what we are getting on a monthly basis. Out of this amount we are going to deduct this amount and put it aside for the savings. So there is a clarity on how much to save and how much is coming and how much we can get through for the expenses. Okay, now the focus here will be, because by that time you would have taken your first or second promotion in place. Now the salary bracket has increased or your income has increased little further, right? Now the focus will be more onto the tax saving, and this is where first time some of your friend or your tax consultant or your finance person or your HR or your very close buddy, he says, why did you take insurance? Because insurance will reduce the tax amount which you need to pay to the government. Okay, so this is how first time somebody got introduced to insurance. Either it is your HR manager or it is your finance person who is going to deduct your salaries on a monthly basis, or it is your close friend or your neighbor who is very close to you, who actually introduces you to insurance. That's how the first time you listen about the tax, that's when we actually look into the insurance, the life insurance for the first time. Okay, and then we say, okay, who is that? We'll just get to know some reference, and then we talk to that guy, and then we say, okay, fine, so this is my taxable income, and this is what I need to pay the taxes. Now how much do I need to pay to save the tax which I need to pay to the government? That's how first time 99% of the people who have taken the life insurance in their life for the first time has taken it for tax savings. We actually thank government for inducing the savings through insurance for the benefit of the tax saving, for legal benefit of the tax saving for the people. We thank government for that, but at least because of which people started doing their life insurance. Okay, so this is how the situation happens. Now, so from here what happens next? Let's look into the case, right? From here, then the next step is, now there is an emotions which are really higher, because now they realize, because this is where most of the people, they realize that whatever the little money that they have been saving consistently over the period of time, probably it is not going to help them out to the fullest extent for the reason for which they are saving money. I've seen many of the people who started saving around 1,000 rupees on a monthly basis for children. Okay, 1,000 rupees per monthly basis, 12,000 rupees, even if they save it for 20 years. So 12,000 straight away for 20 years, how much it is going to be? Right? How much it is going to be? Tell me. Yeah, put it in the chat box. Put it in the chat box. 20 years, 12,000 per year. How much money they will be saving? Correct. You are absolutely right. It is almost how much? Correct. 2,40,000. 2,40,000 somebody has put in, even if the interest rate, what, 6%, if it even comes up, how much it is going to be? Let's suppose double that money. Okay, so 5 lakh rupees. 5 lakh rupees down the line, to what purpose it can serve in its whole? Like if you see the current education cost of any post graduation or even a graduation for that mean is almost costing around 10 lakh rupees currently. 5 lakh rupees 20 years down the line, is it really going to help out for any specific purpose completely? No, right? Okay, so this is what the fear, what people start gaining and getting some clarity, because they're seeing like, the savings what they are going to do is not going to help them out in a longer way, and they just try to get into some tensions, and they say, okay, I think probably now we need to go in for little risky investments wherein we need to make little more money. Okay, so that's a kind of, it's a fear-based responsibilities will start increasing little bit in the life. Okay, and the responsibility, probably they would have taken a new house or a car on a loan, right? The EMIs have started. The EMIs have started. They need to pay that money consistently to the bank, right? Even this liability has turned up, and savings might not be completely enough to take care of the future responsibilities. Tax savings are already been taken care because they have been saving it for the taxes, right? And now there might be some kind of health issues which will be coming up because they have crossed 45, they have touched 50 years. Now this is the time wherein people will feel like probably we need to go for a kind of a health insurance, or probably the insurance cover, the life cover what they have for 5 lakhs or 10 lakhs or 20 lakhs, whatever they had when they have actually taken the policy when they are a little younger, might not be sufficient enough to cover themselves. Okay, and this is the time when most of the people, they always say probably we need to focus on increasing the life insurance. So the moment they see there are a lot of responsibilities coming up, the moment they see there is a lot of clarity that the amount of savings what they have is not going to meet up the requirements, or the moment they have their housing loan EMI is coming in and hitting it their bank account on a monthly basis. So this is where the situation comes up wherein people think of increasing their insurance coverage. Okay, now let's see what are the responsibilities, general responsibilities, what will be there in anybody's life, if you actually look at it in a generic way, right? Okay, the first one is about the children's education, right? The second one is about children's marriage. Then of course the loan repayment which need to be done. And tomorrow, today we are working, we are young, we are working. Tomorrow, if you are not in a position to work further, there should be a regular monthly income coming in. And at the same time, if say suppose the children are planning to have their own business, probably you want to help them out in setting up their business, or you will be helping them out in taking over your business, right? And so it's like, no, you are planning to help your children to settle in their life, to have their own career in life. Okay, and this is what you are planning now. Okay, but say suppose suddenly, if say suppose there is some kind of eventuality which is coming up, then how do you feel? Who will take my responsibilities? Okay, my responsibilities is whose responsibility? Think it over. Think it over. Just type it in your chat box. Just type it in your chat box. My responsibility are whose responsibility? What are the responsibilities? These are the responsibilities. All these responsibilities which every parent dream and feel for their family. Whose responsibility? Yes, my responsibilities are my responsibilities. How are we? How are we delivering on our responsibility? We are there. We are there. We are any which way we will take care. We are there. Let me just repeat my statement. We are there. Any which way we will take care of the situations. Say suppose some eventuality happens. Who will take care? Right? Just type it in your chat box. Type it in your chat box. Is there any friend who is so close to you who is ready to take care of your responsibilities? How many of us will have such a fantastic sibling who will be ready to take care of all our family responsibilities, especially in this nuclear family setup? Yeah, how many of us are so lucky? How many of us have so much of assets of our family with us, wherein the assets will be in a situation to take care of the responsibilities which we dreamed about for our family? How many of us are so lucky? We can make our fate lucky, even if there is an eventuality, provided we have the right kind of coverage of life insurance. Are you with me? How many of you really want to know in detail about this? Just type in yes in the chat box. Just type in yes in the chat box. We thank all the people who are there on this live webinar on actually responding us, because it means a lot for us, and this is the reason why we always get motivated to do more number of series for all the people who can get some clarity, such they'll have confidence on all your existing life insurance policies, or even if you are planning to take any life insurance policy and you need more details, there is a link which we are actually putting it in the chat box. Probably you can just click on that link, and we'll be also pasting that link when we actually put this video onto the YouTube. There's a link over there, so just click on the link, give all your details. Me and my team will be all out, and we'll be with you in serving your requirements. Any questions, anything, just click on that link, and then you can actually give all your details, and we'll come back to you. Okay, so let's get into the presentation over here. So in case of eventuality, how are we going to take care? Now let's get a little deeper into this. Okay, and one more thing, which is the serious killer for all our savings or for all our requirements, and which is just like something which is hidden. You'll never see it happening, but that's the one which is going to drive every investments or even your insurance. You know what is that? Inflation. And the inflation is actually increasing it further. You can actually see this graph over here. So inflation is increasing on an yearly basis. So the rate of inflation itself is increasing, right? So currently, if you look into it, is 6.9%. That is what is the recorded inflation. But if you look into different kinds of other inflations, like the education cost in inflation, it is almost around 10%. And if you see the commodities inflation, it is almost around 8.5%. If you look into the medical inflation till last year, it is hovering around 7.5%. So, but if you see a real inflation out there, it is a little bit more, but we'll go with the recorded inflation also. It actually is increasing over a period of time. Every year it is increasing. And how is this going to impact all our responsibilities? Let's look into that. Okay, so let's take this case study of children's education over here, right? And in children's education here, you see we have just considered a family size of 2 adults and 1 child, a young family married with 1 child who's 35 years old, and wife is 32, and they have one child who just born. Okay, now let's look into the case study over here. Now for this child who just born, if you look into the current graduation cost, a decent graduation, if we go for any college, it is almost costing around 5 lakh rupees. Currently, this is what we have taken a little lower than the current reality, but still, if this is fine, then I think we are better even if we go for any other more than this. Okay, so and if you see the post graduation cost, it is almost around 10 lakh rupees. Okay, the professional graduation and professional post graduation courses, if you actually look at this is the cost, what is going to happen. Okay, now if you look into the education inflation of 10%, which is there in the Indian market, okay, how much is this going to be when this child who's just born is going to be at the age of 17 years and at the age of 21 years? How much is this going to be? Any guesses? Just put it in your chat box. Okay, somebody says it is 15 lakhs, somebody says 30 lakhs. Okay, and okay, somebody says it is 7.5 lakh, somebody says it doubles up. Okay, thank you for all your responses. Okay, now let me just show you how much it is going to be. Okay, at the rate of 10%, the graduation cost itself is going to be almost 21 lakhs. the graduation cost, which we are projecting now at 5 lakhs. After 17 years down the line, it is going to be 20 lakhs 88,000. That means almost 21 lakhs. If you look at the post graduation cost is coming to almost 50 lakhs. The current 10 lakhs is going to increase by 5 times. That's 50 lakhs. So graduation, post graduation for a particular child, if you look at it, comes almost 71 lakh rupees, and you consider the other miscellaneous expenses like the travel cost, the book cost, this, that, everything together. I think one child is going to cost you almost 1 crore. This is a shocker for everyone. Huh? When I first calculated for myself, this was almost 12 years back. 12 years back, okay, even I got shocked. It's one child is almost like our responsibility to make sure to give the brighter education and the better or the dreams that we have for our children. It costs you 1 crore. Now, but tell me for how many of you is this a shocker? If yes, just put yes in the chat box. Oh my God, I'm seeing a lot of people who are putting in yes. It is even for me when I did the math. Every child to take care of their future education, the minimum required is around 1 crore. Let's look into some more details. Okay, so this is only if one child. Huh? This is only if one child. Now, how about the families who got 2 children? How much it will be? Straight multiple. So they need to plan for at least 2 crores. Now I can actually see many of the spouse, the husband and wife sitting together in this webinar. They must be thinking definitely, oh my God, is this going to be a lot of money costing to take care of the children? Yes, this is the reality. This is the reality. Now you tell me, and if we actually look into the average insurance coverage, the life insurance coverage, if you look at the currently in the market, okay, if you look into the average life insurance coverage a person has got, you know how much it is? It is just around 5 lakh rupees. Around 5 lakh rupees. Now you tell me, with that 5 lakh rupees, in future, if say suppose something were to happen to the earning member of the family, will the remaining people in the family be able to go and achieve all those dreams? No, they can't. That's the reason we need to have, just to take care of your children's education, a particular family, if they have 2 children, 2 crores minimum. So that's the coverage which the parent should have. Right? Is this interesting? And let me also tell you one more thing. You need any more details specifically for your own requirement, we request you to please click on the link which is given in the down, okay, and then they will be actually you can send us all the details through that link, and we'll be coming back to you. And we'll work very close with you, and we'll try to find the customized solution which is specific for your requirement. And we are always there. And we are always with you. Thank you. Okay, and so let's get back to the case study over here. So 2 children is going to be a minimum of 2 crores. So what does this mean? So each child education, each crore required. Each child education requires each crore of coverage. So in case of any eventuality, if that amount of money is coming into the family, the children's education is taken care. Correct? Okay, let's go to the next one. So the next main thing is, if say suppose some eventuality happening, and there should be a regular inflow of money which should be coming into the family. Okay, so how much should be? Let's get into the case study over here. Okay, in this case study, if you look at, okay, there's a family of two adults and two children, with 35 years the husband age and 32 was wife age. Okay, now let's look into the expenses what this family has got. Okay, so they have a regular monthly expenses, basic expenses of 15,000. Okay, and then they have 5,000 rupees as the education and schooling cost. Okay, the books, bags, travel, so many things, right? And then there is an entertainment cost of 2,500 for this family, and then there's a traveling expenses of 2,500, right? And then they have a medical expenses which they budgeted around 2,500, and there are no loans. I think probably the happiest family without any loans. Okay, so there are no loans, and the taxes are also not much because they are within the tax paying bracket. So total monthly expenses is coming to 30,000 rupees in this scenario. In this scenario, how much if say suppose something happens to this earning member of the family, and they need to get these 30,000 rupees on a regular basis? If they have to get that 30,000 as a regular monthly income, even if the income earner of the family is no more. Okay, you want to check that? Are you with me? Check it out here. So a guaranteed rate of 6%, even if we take a guaranteed rate of 6%, even if we take, they need to have a coverage of a lump sum money which is putting into a guaranteed investment of 6%. 65 lakhs is what they need to put it across into an investment, wherein if that income earns that 6% rate of return on a consistent basis, they will be able to get that 30,000 rupees as a regular monthly expenses. It could be your water bill, your electricity bill, your milk cost, your food expenses, travel, so many expenses. And mind it, all this is without your EMIs. Okay, this case is without EMIs. Okay, now let's look into the other scenario. A family, a similar kind, okay, but who has got a regular EMI payment of 20,000 rupees. Housing loan, or it could be a car loan, both the things together. So they're actually paying it 20,000 rupees as an EMI on a monthly basis. The same, then their monthly regular income has now increased to 50,000 rupees. In this situation, how much of coverage? Almost they need to put 1 crore, 8 lakhs 33,000. Okay, so let's assume 1 crore is what they need to put it across into a guaranteed investment, wherein they can start getting that regular income. And this regular income can suffice their regular expenses of 50,000 rupees per month. And this income is going to be for the lifetime. Always the regular income and the regular expenses, if it is matched, then that will take care of your regular living. Insurance is the best way of actually equating both of these things in case of any eventuality with a very cost-effective situations. Want more details? Just click on the link below, and even my team is also there. You can also give a missed call on this number, that is 7569 645 645. This is the number on which me and my team, we are always there, and we are always there to help you out. You can also click a link over there, and then give us the details. We'll be also coming back to you. Okay, now let's get on to the presentation. So this is how the regular income, if at all, need to be there. You need to have the amount of lump sum money which need to be put into the investment, in a guaranteed investment. Okay, so what does this mean? This means for any lifetime income, there should be a lifetime income for lifetime expenses. 1 crore capital for 6 lakhs of per annum income. A regular 6 lakh per annum income, that is a regular 50,000 income per month. You need to have 1 crore of amount deposited into the guaranteed income source, where it keeps on giving you that 6% rate of return, and the family will be getting that 50,000 rupees on a regular monthly basis. Now, what does this mean? This mean that for any family, if the expenses are almost close to 50,000 rupees on a monthly basis, they need to have a minimum life insurance coverage of how much? Put it in the chat box. Put it in the chat box. Yes, 1 crore. Now, this is only for regular expenses. Now, if they have 2 more children, that means 1, 2, and 3. They need to have how much of coverage? 3 crores of coverage. You're getting it? I hope it is becoming clearer to everyone. If yes, just type in yes in the chat box. Oh yes. Oh, thank you. Thanks a lot for responding. Okay. So I'll make it very simple for you. Number of dependents in your family equals to number of crores of life insurance coverage you need to have. Simple. Is this clear? Number of dependents on you in your family equals to number of crores of coverage what you need to have. Got it? It's life insurance coverage, how much to be taken, is as simple as this. Let's get on to the presentation. Okay, right? So let's see. People will definitely say this. Okay, they'll definitely say that, oh my god, what are you saying? 1 crore, 2 crore, 3 crores. What is this? How much of premium do I need to pay? Probably I have to take some loans to pay this premium. Right? This is the thought process. Yes? Am I right? This is what is getting in your mind? If yes, okay, just put it in the chat box if it is yes. Yes. so many of the people are saying it. Yes. How much the premium is going to be? Is it that not going to be more costly? No, never. Okay. Not having this insurance will be proven more costly, not just for you, but for your entire family. Not having life insurance coverage will prove more costlier than having the life insurance coverage. Always have your life insurance coverage. We have the best of the best products which are available in the market where it is highly cost effective. We have those solutions with us. Okay, and just look through this. Okay, not having insurance is more costly than having the life insurance coverage. Okay, so let's see. We need to look at what is the premium per lakh which we need to pay for the age what we have, and then see how effective it is. Okay, now this is in case study what we are giving over here. So 1 crore of coverage for a 35-year-old person. It is as low as 13,000 rupees per annum. Now you tell me, is it so costly for 1 crore of coverage? And for a 35-year-old person, the same person, if he goes to 42, that is just 7 years. See, 1 crore of coverage is almost costing 24,000 rupees. Okay, right? You need more details. Me and my team, we are always there. You can just type on this number, that is 7569645645, or you may even click on the link which is given below, wherein you can just leave all your details and we'll just get back to you. Let me just tell you one more thing. In this series of Get More from Mallapuram, we do not represent any one insurance company. We only represent your requirement. We are here only to provide you clarity such that you will have confidence and what are the policies that you have or planning to purchase. Are you with us? Okay, yeah. Let's get back to the presentation. Okay, so come to the presentation over here. So its premium is a little costly. Now you can see the values over here. It is not that costly. Okay, right? So how much of policy term? Okay, all this is fine. Like now we have seen many of the people who are saying fine, go for a pure term insurance policy from any of the companies, and sometimes even people even say that you go and purchase it online because no agent is involved or no intermediary is involved in between, and you will get a better rate. All these things are fine. All these things are fine. But how long do I need to take the policy? Okay, so this is the next question which people will be having. Coming to that particular point, okay, the policy term, if you look at how much should be, just type it in the chat box. Let me just see what is your response on that. Is it 10 years or 15 years or 5 years or 20 years? What should be the term? Just type it in the chat box. I just want to see your response on this. Okay, somebody says 10 years, 15 years, 20 years. Somebody is saying, okay, 25 years. Good. Thank you. I thank each of you for responding this. Okay, but let me just ask you one question. How guaranteed are we? Let me repeat my question. How guaranteed are we that we are going to live till age 50? Or we are going to live till age 60, or we'll live till age 80, not beyond that. Okay, so there is always a probability. We are living till 50 or 60 or 80, it's all probability. We may live, we may not live, it may happen, it may not happen. But just in case if it doesn't happen and we live further, then how? Okay, you're getting it? The best way of choosing the policy term for any of your life insurance policy is till we live. Yes, till we live, we need to have the coverage. Till the last breath, we need to have the coverage. Now, the question is, how long are we going to live? There's no guarantees, it's only probabilities. But definitely the near to guarantee what we can think of is the whole life. Okay, so go till age 100, till you touch age 100, have your policy in place. The best life insurance policy which you can ever purchase is the one which is going to cover your entire lifetime. An entire lifetime, in the sense it should be the real guarantee kind of thing. The maximum term which is given under any pure term insurance policy which is given is till age 100. We have such kind of policies in place. You need any support, we are always there. We do not represent any one insurance company. We only represent your requirement. And we always love to give this kind of clarity such that you will have confidence when you are purchasing your life insurance or when you are reviewing your existing life insurance policy. Okay, and for any details, just click on the link which is given below, or you may even give a missed call on this 7569 645 645. This is the number which is actually getting flashed out here, right? You can actually dial on even on that number, right? Okay, now, so can we really pay it for the lifetime? Yeah, you can. Say suppose there are no responsibilities which are there. You're finished with your responsibilities, and there is no need for you to have a life insurance coverage after some time, probably at age 65 or 70. Like, you already finished all your responsibilities. There is no economical burden or a constraint on you, right? You must still consider paying the premium, or if you wish, you can also even stop paying the premium. Okay, because at that point in time, you will not have an option to extend your life insurance policy. Okay, you cannot have that extension of your existing life insurance policy at that point in time. Instead, if you don't want it, you can just stop paying the premium and the policy will stop. Okay, right? So you can stop paying your premiums when it is not required for you, but you can't extend your existing life insurance policy. This is the reason why we always say have your life insurance policy for your entire lifetime till you reach age 100. right? Are you with me? If you're all with me, just type yes in your chat box. Okay. Now, so that's the reason why we say have a happy family life, protect your dreams, have your protection covered, okay, and cover it fully, okay. A family of 4 people are there, have at least that 4 crores of coverage. How much is that going to cost? It's so less cost, it's highly cost effective nowadays. You want any detail, me and my team, we are always there. You can just dial up this number 7569 645 645, or you may also even click on this link which is given below. Okay, you are with us? Fine. Let's go to the conclusion part. So, how much of health insurance one should have? Okay, so the conclusion part is we need to have a minimum of 1 crore, which is covering your regular expenses. We need to also have number of dependents equal to number of crores of coverage, and the amount outstanding, the outstanding loan amount should be added up onto this. So if this is taken care, then it's absolutely fine. So this is the amount of coverage a particular family, the earning member should have on his life to take care of the dreams and the responsibilities which he got towards his family. The caution here is protect your future requirement, not your current requirement. Okay, and take your policy term always for whole life till you reach age 100. Okay, so that comes to this section. Now let's get on to the conclusion part, that is about the action points. What we request everyone to do is please go through, take out your existing life insurance policies. Probably you have taken 5 years back, 10 years back. Pull out all those documents, go through the benefits what you have, and then have a review with your existing advisor. Request your advisor to come down home, offer some food, offer some dinner or a breakfast, and then just go through and review all your policies over a weekend, right? And this is something which we really love, and this is where we are promoting this, the culture of discussing insurance on dining table. We are through this series of Get More from Mallapuram, we are promoting the culture of discussing insurance on dining table, because it's not just having your own policies in place. You need to give the details of your existing policies to your family members. In case of any eventuality, they should know how to handle your policies. It is not that you are going to handle it. In case of eventuality, you need to prepare them what are the steps which they need to do. And this is where we are actually promoting this culture of discussing with your family members about insurance on the dining table. Okay, and make details available to all your family members such that in case of any eventuality, they'll be in a position to go ahead and handle the eventuality and take care of your responsibilities and your dreams which you dreamt for them. Okay. With this we come to the conclusion, and the series of my family, it's whose responsibility to take care of my family, it is always my responsibility. Okay, with this, thanks a lot, and we look forward for yet another episode on Get More from Mallapuram. We look forward to see you again on the next 4th Saturday. Thank you.